Hello guys, welcome back to your favorite YouTube channel where you get regular updates and technical analysis on Dubai financial market. Today's video will be very interesting as I'm sharing with you a strategy that works and increases the profits. If you are new to the channel, I highly recommend you to subscribe and hit the bell icon so that you get notified when I post such videos. I highly recommend to watch the video till the end as I will be giving you a tip that will improve your trading. With that, let's start the video. Let me introduce the strategy now. Most of the times we as a traders are a bit nervous and confused at the time of entries and exits. At the time of entries we ask ourselves, shall we enter the trade now or wait for a pullback? At the same time, at the time of exiting the positions, again we ask ourselves, shall I book the profit or let it run? All these emotions will be eliminated once you use this strategy, as this will increase the profits and also keep you in the trade till the end. Let's get to the strategy now. To use this strategy, you have to look for a stock that is in an uptrend. If you don't know how to analyze a stock, if it is in an uptrend or downtrend, I highly recommend you to watch my video that I had posted earlier on analyzing a trend. I will put the link in the description box below. Second thing is an indicator that we will use is stochastics. It's very easy and simple indicator, nothing to worry, I will guide you step by step. Third and final element is 8-day exponential moving average. We will call it a signal line. Now let's go to the charts. To explain this strategy, I have taken Emaar Properties as our example and I have used two indicators. This yellow line is 8 EMA, it means 8-day exponential moving average. Here you can see stochastics, it's with default settings. Stochastics, when it's above 80, it means it's overbought. When it's below 20, it means it's in oversold condition. So let's get back to our three elements or three conditions. First thing was to see a stock or find a stock when it's in an uptrend. Clearly we can see Emaar is making higher highs. Here it's making higher highs and it's making higher lows, meaning it's in an uptrend. So criteria number one is checked. Now let's see the criteria number two. It says stochastics should be in an oversold condition. Here we can see a recent example, it's in an oversold condition, it's below 20, exactly this is the position. So we are fulfilling two criterias now. The first one, Emaar is in an uptrend. Second one, stochastics in an oversold condition. Third and important condition is we want to see a close above this yellow line, that is 8 exponential moving average. When we saw this one, this is a good chance to enter the trade. A doji and a green candle stochastics in oversold condition, we can enter the trade right at this candle and we can hold the position till we see a close below this yellow line. So our emotions will be in control. When you see a close below this yellow line, you can exit the trade. There will be no nervousness, there will be no emotions, there will be no confusions. When you see a close below this signal line, you exit the trade. When you see a close above this yellow line, that is the signal line, in an uptrend and stochastics in oversold condition, it's a good time to buy. Now you can also say there was similar condition right here, but it didn't work out. Yes, there is no strategy that will work 100% of the time. This strategy I have been using and it works very fine. It gives 90% of the accuracy. We will check out some more examples. Second example on Emaar again. The first criteria is to identify a uptrend. As we all know, we are seeing higher highs and higher lows, meaning it's clearly in an uptrend and it fulfills our first condition. That is to see a stock or find a stock in an uptrend. Second criteria is to see stochastics in oversold area. Below 20 is oversold. Exactly at the same place we are seeing buy signal, meaning a close above this yellow line. With this green candle, this is our entry level and we exit the trade until we see a close below this yellow line. When we see this red candle, we exit the trade because we are seeing a close below this signal line or 8 EMA. Now, what happens usually is when we enter the trade here, When we see this red candle, we immediately try to exit the position thinking a downtrend have begun. But if you use this strategy, you can clearly see price is above this yellow line very nicely and it's holding it. Once you see a close below this yellow line, that is the signal line, you have to exit the trade. Now clearly, as you can see, if you enter here and hold your trades till here, this is good profit for intraday as well and for swing trade as well. We are clearly taking out the previous swing high, meaning this trade is very good. We will see some more examples on another stock now. Salama. Let me give you a different type of example so that you can understand the concept and use this strategy in your trading plan. Let me zoom out. Okay, we can clearly see previously Salama was in a downtrend. It was making lower lows and lower highs. Right from this level, it made a U-turn, meaning here it made a reversal, and we can clearly see it's making higher highs and higher lows. It means a uptrend have started. Clearly it's making higher highs and higher lows. Now, once we have identified this one, let's get back to our three conditions or criteria. First one is we have to see an uptrend. Yes, we are seeing it's in an uptrend, it's making higher highs and higher lows. Second condition is stochastics should be in oversold condition. Yes, second condition is also met, but straight away if we can see in the chart, we are not seeing any buy signal. That is a candle close above this signal line or the yellow line. So we skip this and we do not enter the trade. We again wait for another chance. Again here we can see stochastics is in oversold condition, but here again we are not seeing a buy signal. Instead we are seeing here. We can still take the trade. We can enter here and we can close our trade once we see a close below this yellow line. Now say we entered at this point here, meaning it was not in an oversold condition, but it just came out from oversold condition, as you can see. So we entered here, our stop loss is here, and now we are targeting the previous swing high right here. But the moment we entered, we can see, let me adjust the chart. Okay, this is better. The moment we enter the trade, market is in sideways mode now. It's not trending, it's in a sideways mode. As I mentioned, this strategy will only work in a trending market. In sideways market, do not try it. Your stop loss will hit again and again and you will not profit. Clearly we can see it's in a sideways market, is not trending. So what do? We have to take the trade. We are traders, we have to take the trades. So we enter here and we exit here when we see this red candle right here at this level. Now let's wait for another buy chance. We can clearly see market was again in oversold condition at this level, but we are not seeing a proper close above this yellow line. That is 8 EMA, we call it a signal line. Now once you master this technique, and if you are a beginner, do not try it, but once you master this technique, we can see a good opportunity here. We can clearly see a close above the yellow line with a solid green candle, that is bullish candle. Once you know how to read candles, you can enter the trade. This one is in overbought condition. Check this one. This is in almost overbought condition. It's touching 80. But as you can see, it have closed above this signal line. Now it have started a trend. Check this one out. You can stay in the trend till you see a close below yellow line. Check here. You entered at this level. You entered here at this level and you are in the trade. You are holding this trade for how long? For so many days, and now you exit the trade at this level. This is called a solid gain. This is called a perfect trade, and you can make huge profit out of this strategy. Again, we will see a recent example. Check this one out. Let me move. Okay, we are in oversold condition here. Yes, we are not seeing the trend, and we did not see a close above this yellow line as well. So we hold it. At this level, we are seeing a close above yellow line. It's a buy signal, but we are still not in a oversold condition. That is the reason I'm showing you a different example so that you can understand. Once you master this technique, you can enter anywhere between this range. But the safest bet is when stochastics is in oversold and you see a buy signal and a close above this yellow line. Now, clearly we can see once you enter here at this level, you are still holding the trade. We are not seeing a close below this yellow line. Again today it have made a solid green candle, meaning we are above yellow line and more upside is expected. Till the time you see it's moving above the yellow line, you are holding the trade. Your first target should be now at the previous swing high at this level. Once you see a close below yellow line, exit the trade. So I hope you like this strategy and you have understood it completely. If you have any questions, do comment below and let me know. Now, let me give you few tips to improve your trading. Let me give you 2 tips in fact. First one is, do not come in the market with any bias in your mind. Say for example, let me remove the drawings. Say for example, you are hearing from everyone, okay, buy Salama, buy Salama, buy Salama, it's in a bull trend. You have decided already, next day I want to buy Salama. Do not do that. Maybe it's time for a reversal, market starts coming to the downside. You purchase here and you get stuck. So the best thing is, let the market open, wait for 15 to 30 minutes, let it decide the course of action. If it is trending to the upside, enter the trade. Just do not be biased towards buy or sells. Enter the trade only once you see a confirmation in the market. This way you will be neutral and you can take good trades. Tip number 2. Okay, as you all know, in Dubai financial market there are many stocks with red flags. Avoid the companies that are with red flags, meaning those companies are in loss with more than 50% of the capital invested. Why to take risk? As you all know, the condition with ARTC, plenty of traders are stuck with it. They cannot recover the money and they are in huge losses. So avoid the companies that are flagged in red. Yes, you can trade yellow flagged companies. They are still better and safe. I hope guys this video was helpful. If you like the video, give it a thumbs up. Do comment and let me know once you have started using this strategy. That's it guys. Thank you for watching and keep stocking.